I'll let Adam Shepherd, who works for Notion Capital in the UK. They're based in Notting Hill in London. And what can I say about Adam? Adam is an investor. He's been at Notion Capital for 2 years, focusing on investing in B2B and SaaS companies. Prior to that, he was at Currency Cloud and helped them with their Series C fundraise. So he really knows this space inside and out. I'll just let the change happen quickly. If you could keep it down, please. There's a lot of room in the front row, everyone. Shh. And then, as usual, I have a quirky fact about our panel moderators. So Adam once starred as an extra in a Malaysian film. I don't know, is that as cool as a Bollywood film? You can tell me about that later. So with that, over to Adam and the panel. Guys, go.
Ya no sé. Estaba pensando quitarme la chaqueta, pero...
No hay orden, ¿no?
Can everyone hear me at the back? Can you just raise your hand at the back if you can hear me? Okay, great. Thank you very much. Well, I'm delighted to be here. As was just said, my name's Adam Shepherd. I work at Notion Capital. We have a fantastic panel today. 5 exciting companies, all in the P2P or crowd space in one shape or form. We have Lupina Iturriaga from FinTonic, Philippe Gelis from Kantox, Carlos Silva from Seedrs, Francisco Sierra from Funding Circle, and Robert Knacklehout, did I get that right?
Yeah, you got it right.
From Houses here. And I'm just going to ask them initially to give a little description, short description of the company, including when it was founded, and maybe one key measure that indicates the scale of the company. Do you want to start,
Okay,
Lupina?
thank you, Adam. Well, FinTonic, it helps you to manage better your money. And what we do is put the power back into the users. So we are not just a PFM that tells you where your money goes and what at speed. That's important because I fight a lot with my husband to know where my money went in the past. But also it gives you alerts when something wrong happens. For example, if you have a duplicate charge, or for example, if the bank charges you a commission or a fee, so you can't claim your bank. But it also anticipates the user's need. That's really important because you can get product through the app. You can get a loan in less than 3 minutes just through the app with the experience of FinTonic, no? And also you can get insurance. So that's what we do. We try to put the power back into the users so they can better manage their money and make the most of it.
Okay, thank you. Philippe?
So in Kantox, we build foreign exchange management solutions for businesses. So in other words, we help businesses with international trade to buy and sell foreign currencies cheaper than banks, but we also build software solutions for them to monitor better the risk and completely automate transactions. So we are 80 people headquartered in London. We have the back office in Barcelona, and we have exchanged close to $4 billion on the platform since inception.
Carlos?
So Seedrs is the leading European equity crowdfunding platform. We started operating in 2011. Actually started working on it in 2009, but it took us a while to get the regulatory approval. We now have offices in London, Lisbon, Amsterdam, New York, and we're opening a Berlin office this month as well. Through us, over 350 companies were funded, with a little bit over 150 million euros being invested through the platform, and we're 60-something people at the moment.
Francisco.
Francisco, yeah, thank you. So Funding Circle is the leading global marketplace lending platform for SMEs. We bring together investors with small and medium-sized companies, which are lenders on one side and borrowers. And we are based in 5 countries, UK, US, Germany, Netherlands, and Spain. Up to now, we've lent 2.7 billion to 20,000, above 20,000 SMEs, small companies.
Thank you. And Robert?
Yeah, basically we're housers. Housers brings the power back to the people for investing in real estate. We allow people to invest in real estate projects from 50 euros. We started last year in July, and we have already we've already managed projects for 12 million euros, and we have 25,000 users active on our platform.
Thank you. Okay, so to some extent, greater or lesser extent, all of these companies have P2P or a crowd involved in the business model, and that's obviously the topic of discussion here. So I just want to ask, that's about building a marketplace, probably a two-sided marketplace. So of course that's not limited to finance. So we've got like Airbnb and Uber, and I imagine lots of people here will have used those companies or similar. I just want to ask if you could just raise your hand if you're sitting here and you've used a financial P2P platform in one shape or form. Okay, quite a few people, not loads. Has anyone used one of these platforms? Okay. Similar sort of numbers, actually. So you guys got the market wrapped up. That's great. Yeah. And is anyone here thinking about building their own, or maybe is in the process of building their own? No? Okay. Well, I'm sure there are still startups in the room. We're going to try and tailor the questions a little bit to startups. So, the way I think about a marketplace is you've got to have lots of buyers, lots of sellers, and that fragmentation to get you liquidity. So I want to ask, let's start with, can I ask you, Robert, how are you disrupting incumbents in your space, and how are you building liquidity?
Well, basically, until houses launched in Spain, the only way to invest in real estate was having a lot of money and put all that money in one specific apartment or one specific house and start getting benefits from that. With the launch of housers, everybody can now invest in real estate. Everybody can decide which projects he wants to invest in, and basically from amounts as low as 50 euros. So basically, you can spread the risk over various projects, and you can take benefit from a market which was really closed until now. In Spain, we're the first platform. The concept is already a few years old in the UK and the US, but in Spain we're the first, and it's been amazing until now.
And how have you built up liquidity on your platform so far?
Sorry?
How have you built liquidity? Because you need to have lots of buyers and lots of sellers potentially, is that right?
Yeah, because basically we started with, I think, if I recall well, just one or two projects which were relatively cheap, like 100,000 euros of an apartment which needed to be reformed and would be rented out. It looked like there was quite a market interested in that specific kind of financial service. And it basically was filled really rapidly, and basically because we don't buy ourselves. There is a special vehicle created for every project, and the objects are not bought until those special vehicles are financed by our crowdfunders. So basically, the money directly goes from the crowdfunders to the specific projects. Okay,
thank you. And can I ask you, Carlos? So how are you disrupting the incumbents of that industry? You're an equity funding platform. What was the situation beforehand? How have you guys changed it?
Sure. So the situation before was an ecosystem where only the 0.5% of the population could actually invest in startups. And at the same time, for entrepreneurs, the process of raising capital was particularly painful. It depended a lot on who you knew and where you were at that moment. And we know that there are really good entrepreneurs everywhere in the world, but you don't have access to investors everywhere in the world. So it was a very inefficient market more than anything, and it was closed to very few people. What we tried to do was actually make it a lot more efficient, not only for the incumbents who were already there, but also by doing so, opening up that market to a lot more people. So that's basically what we did. We now allow entrepreneurs from anywhere in Europe to raise capital from any investor anywhere. And when I talk about investors, I'm not just talking talking the traditional VCs and professional business angels, but also the kind of amateur business angel and people who are not kind of business angels that don't have the time or the money to invest large sums, but can still build a diversified portfolio with small amounts. So that's basically what we ended up doing and creating.
Okay, thank you. So I'm hearing about this access. Both of you guys are talking about access to a wider group of investors, say, and potentially, in your case, entrepreneurs as well. What about this idea that a P2P marketplace, you're actually cutting out a middleman in some sense, and therefore maybe your prices are lower? Would that be true for, do you want to take that one, Philippe?
I think that when you are scaling the business and when you are maturing, and I think that fintech has reached some stage in terms of the maturity, peer-to-peer and crowd is becoming completely irrelevant.
Okay.
I mean, in the end, you have a client which is on one side or the other. And I think the demand, which is the end client, don't care so much how the liquidity is created. If you have someone looking for a loan, he doesn't care if money is coming from the crowd, from a peer, from a financial institution, from a hedge fund, or anyone. So for me, for these models to become mature and to last on the long run and to get a real market share, you need at some point to get liquidity from very different sources. So my view is that speaking about peer-to-peer is not really more relevant. And I see that in the industry, most people don't speak really about peer-to-peer. It's more a generic concept, which will disappear.
That's interesting. We love a bit of controversy. You have to bear with us, though, because that is the title of the piece. But so you're saying that peer-to-peer is fairly irrelevant. What about when you get, as long as you've got some liquidity, what about if you have sort of a real dominance on one side of the market versus the other?
For me, what you need is to be sure that you're, what I name the end client. In our case, for example, it's a business looking to buy and sell currencies. I think in your case, it's a business looking for a loan. In your case, it's a startup looking for funding, or in your case, it's someone looking to get funding to buy a house, for example. This is your end client. This one, in my view, doesn't care how the liquidity comes from. 100 euro is 100 euro, coming from a bank, from a peer, from anyone. It's the same amount of money. So I don't think the way liquidity is created is really relevant.
But, I mean, for anyone starting a business in this space, obviously they have to build both sides of the market. But, I mean, what about the concept of using your own balance sheet, maybe taking some risk? Do you want to just tell us, Lupina, to get you involved here, do you guys lend from your own balance sheet?
Well, we have both. We have more than 400,000 users, and they really love us, no? And we have a really trustworthy relationship with them. Our retention rate after 12 months is more than 50%, they see more than 12 million screens per month, so they're really, really engaged. So what we do is, as they trust on us because we are aligned with their interests, we have this marketplace that everyone can connect, banks, fintechs, wherever, to give a loan. We don't mind. The people need the money, no? That's the issue. And we have also our company with our own balance sheet, but as we have to be independent and transparent, no? It's very important for us. We make others to connect also to the platform. So the user will get their own tailored loan for it. For example, for you, it could be just an interest rate of 5%, and for me, maybe 20 because I am not so good. No, that's the issue. So it's not, for us, it's irrelevant who is connected to the platform.
Let's come back to that. So, Francisco, what about you guys? Your own balance sheet?
So, no, we don't invest through our own balance sheet, but what we do is we bring together many different types of investors, and that's the key. I think that going back to what Philippe was saying, it's not really the power of the crowd, it's the opportunity that a marketplace, online marketplace, gives everybody, right? So we've got like grandmas that invest from 50 euros onwards, then we've got professional investors, family offices, we've got institutional investors, big hedge funds, we've got banks, we even have governments. So in the UK, we've got the British Business Bank, is like the ICO here in Spain, right? So we've got any type of investor investing with the same conditions in the platform. So what it brings, it's democratization to the market. That's the real power of the marketplace, really.
Okay.
And answering your question, excuse me, we don't invest with our balance sheet. However, we did build a fund for any kind of investor that can actually that fund will invest in loans in Funding Circle, meaning that if you invest in that fund, you will diversify across countries and across industries and different risk levels.
Okay, so let me ask you then, if you don't invest from your balance sheet, are your interests aligned with the users on the platform? You know, maybe professional investors say to them, okay, fine, you're on your own, you know what you're doing. When it comes to the individual or retail investor, you know, is there a risk that you haven't got any skin in the game and therefore you're more focused on building transactions? You know, you get pressure from your investors to scale the model. And then, you know, we could take a comparison like in the global financial crisis where you had these guys selling mortgages. They didn't care if the person understood the product. You know, how do you build trust? How do you make sure that doesn't happen if you don't take any risk?
So people say we don't have skin in the game, but we really have a lot of skin in the game. I would say we have the most skin in the game than anybody because we are depending on both sides working properly. So we have a reputational risk, right? If without that good reputation, we'll lose either the borrowers or the investors. So we've got bad borrowers, the investors won't get the return, we'll lose our business straight away. So it is of our interest to bring both good borrowers that pay back and then investors that keep coming because we're giving them a good experience.
Okay.
So that is skin in the game.
Philippe, do you guys take risk?
No. We are from an exchange company, so we take one currency and we exchange for another. So no, we are really an intermediary, but we are not taking risks.
Okay.
It's a bit easy on that side.
Okay, so I'm going to ask you, Lupina. You guys do lend from your own balance sheet.
And also from others.
And also, yeah. So you have this concept of access, but then I come back to the question in my mind around if you do lend from your own balance sheet, maybe you have you're pro-cyclical in the way that a bank might be, in the sense that, you know, this idea of marketplaces opening access to people, driving liquidity up by bringing people on. But if you're taking your own risk, then is there an issue perhaps when there's a downturn, you're going to stop lending?
Well, we have our scoring algorithm, so we have to be prepared and we have to stop. And of course, when someone doesn't need a loan, we are not going to offer it, okay? Because that's our point of view and everything. So if we have to stop lending, we will do it because we have that marketplace over there. So we are really cautious about what we are doing, and when right now is the right moment to do it, so we are on that. But we have many different ways of making profits. We do give insurance also. We do many other things. So I am not concerned about that.
Okay. Thank you for that. In the UK, I read recently that the FCA is doing a review of crowdfunding and peer-to-peer. Does anyone want to talk about maybe areas of regulation or how you see regulation changing for the space going forward?
So from our perspective, I think that anything that the FCA can do to help build trust into the industry, that's a good thing, and try to normalize some of the processes for the different platforms, that's a good thing. I mean, we were the first equity crowdfunding platform in the world to get regulatory approval. That meant that it took us 2 years to get that regulatory approval, but at the same time, it also meant that the FCA kind of learned how to do it with us, which is kind of good for us in a way. But more than anything, I think that there are multiple players and there are more and more equity crowdfunding platforms popping up, and not all kind of use the same processes and kind of do things in the same transparent way. And I think that anything that can be done to make that process more transparent is a good thing without imposing too many hurdles into the process.
Okay, that's a perfect segue then, because I wanted to ask, how do you differentiate yourselves from someone else operating in the space? You know, you're talking about transparency is one way. Are there other innovations that your companies have come up with that you think are really stand out and are different? Francisco, do you want to take that one?
Yeah, definitely. So we're basically analyzing companies, SMEs, as banks do, but we have to add a different layer, a new layer. And the new layer is the new data that's available, right? So the thing, being a fintech company allows us to be much faster and much quicker adapting to all these changes, all this new data available. So we can change our risk scoring models much faster than any bank. And that allows us to keep improving in circles, right? We got more data, we got more results, we got more clients, and then we keep growing that circle. So what I would say is our key advantage is to have a scoring tools, scoring system, way of doing an analysis on a company that is more up-to-date or more advanced than it was historically, right?
So, I mean,
traditional way of doing it.
Someone might come back and say, okay, there are banks that have been lending for a long time. They have the quantity of data, but you're saying it's the quality of the analysis and doing it in real time, maybe. Is that fair?
Yeah, that's fair. It's all about data, right? It's all about more data means more knowledge about that company. If you can treat it well, if you can really automate and process that data properly and learn from that, that's where you get the innovation. And for us, it's business analytics, basically.
Okay.
It's all about.
Makes sense. Thank you. I'm going to ask for some questions in a few minutes, so please have a think. I'd like to ask you, Robert, what do you think we'll be talking about in a year from now in terms of the P2P space or financial marketplaces, let's say?
I think that...
Putting you on the spot a little bit there.
Sorry?
I'm putting you on the spot a little
Yeah. Well, that's what we're here for. No, basically, I think that it will demonstrate we're here to stay, that there will be some preoccupation from maybe the more institutionalized players, like, okay, maybe we're going to eat more and more space in the financial business, and there might be some more regulation, because in the end there might be some, how do you say, pressure on that side. But I think that the benefits we offer and the flexibility we offer is so much bigger than the traditional traditional sector. So basically, in that sense, I think we will be much bigger and we will be much more important in a year from now. If we look at ourselves, well, we have pretty ambitious goals for funding and for projects for next year. So basically, we're basically aiming at almost duplicating our user base and our base of project financed within even a half year. So basically, it's an ambitious market with a lot of space, and we're definitely going to be here to stay.
Anyone else have a sort of a different idea? Probably it's not going to be that the future is not bright, but are there particular areas that you think we'll be talking about in a year from now that people maybe aren't talking about just now?
No, I think that in general, the hype cycle in fintech is over.
Okay.
So growth at all cost by spending crazy money is almost finishing. I think that now it will be about building real business, very sustainable on the long run, which basically means you need a very different and unique technology offering. Growing a lot just because you spend a lot, I think this formula will not work anymore.
There's a lot of players who are just acquiring users through marketing spend.
Yeah, so I think this is over, and it will be really now about technology, unique technology, different technology, and so positioning you can really defend over the long run.
Do you want to tell us about your unique technology?
No, but if you take our case, no, but it's for everyone, but I think that in general, if you adjust, for example, an alternative to banks and cheaper than banks, on the long run, you cannot rebuild the financial industry based only on lower cost and marketing spending. You need to rebuild it based on very different and unique technology, because it's much quicker, frictionless, because it brings different kind of value, automation. So I think it's really the next phase in fintech. Growing just based on marketing, at some point it's not working.
Okay.
We're missing sorry, excuse me, I may interrupt. We're missing the bit of the banks, right? I think that a year from now we'll see that collaboration starts growing, and we've seen already some matchmaking, maybe some banks falling in love with some fintechs, but the dating phase will come in a year from now, I think. So, and that is good for both, right? Good for the banks, good for fintech. So.
Okay.
Yes, the true thing is that in 10 years' time, who's going to be here? Banks, fintech? No, the client. The client is going to be there. So someone who responds their needs in a fast way, through the phone, through the voice, very easily, very fast. And you are not going to be married to one entity. You will want the best product for you that fits for you, not for yourself. So if you have an app that gives you that and you have that in the future, that one is going to win. I don't know if it's going to be Google or it's going to be us, hopefully. But the client is the one is going to be there. I don't know who else.
Okay, that's a neat way of wrapping it up. Thank you. So does anyone have any questions? There should be a microphone going around, I hope. Yeah.
Hello, everybody. I am Ignacio Cea, coming from Bankia. I have a question for everybody. The question is, how do you think PSD2 is going to help you in your business?
In my case,
PSD2.
a lot, because all the info is from the client, so it belongs to the client. That's the spirit from PSD2, and all the banks know it, and for us it's great, no? Because to make very informed decisions, you need to have your information, and you want to see it through the way you want, no? For example, in our case, from FinTonic. So that way, the people will decide which loan is better for them or which mortgage and what they have to do to get a better price. For example, I don't know why my brother got a better interest rate than I did. You don't know that in Spain because we don't have FICO score, we don't have a speed score, you know. And for the Spanish market, it's really, really important. So the users in the future will be more informed, will know what to do to get a bank, and they don't go, they're afraid or scared what's going to happen if they're going to give it to me or not, because they will know it. They will know how to manage better the money. So for us, it's great, the PSD2.
Does anyone else want to respond to that about regulation?
Yeah,
Well, PSD2 at the end is just opening that data for everybody, right? So as I mentioned, it's just like allowing us to do our job much better, much faster, connecting directly to that sources of data. So we can use that data in a direct way, and we don't need to ask the client to send it to us. We can just plug it in.
Are you thinking already of new businesses to do over the PSD2, or it's just making the same thing quicker or better? Are you thinking of new businesses?
But for me, there are two sides of the PSD2. Right? So just for those who don't know, PSD2 means that basically any fintech company or any company can get access to the client or the user bank's data and can execute transaction on behalf of the client. So for example, if I take our case, the client can come on our platform and on our platform ask Bankia to send us money. So this makes that banks are losing ground in terms of user relationship because the user can manage all in finance without having to connect anymore to the banking platform. So this is a dramatical change for me for banks. They may lose a lot of clients very quickly because fintech company will just make it as simple as clicking one button, for example, and the client will be able to withdraw all his money from his bank and move it to another one. So potentially this is a huge game changer. I hope banks will create a lot of friction and will delay it as much as they can. There is no doubt about it, but it's a complete game changer for banks. Huh?
Okay, does anyone have any more questions? Can't see very well, so yeah, I think there's one over there. Okay, this is the last one, I'm afraid. Just keep the mic close to your mouth so we can hear you.
Hello, this is Carlos speaking. Let's say that we are now in 2018 and the PSD2 is already open and you have all the data from the customers. How are you going to get their trust?
What have you said?
Does anyone, can you just repeat that?
Yeah.
More loud.
Okay. I mean that let's say that we are now in 2018, okay? And you have all the data coming from PSD2, okay? Why do you think that the financial customers are going to trust your solution?
Because they are already trusting us.
No, I would say because it's the client that owns the data, right? So he's the one that's going to say, I want to send that data to this one or to that one. It won't be the bank. It will no longer be the bank saying, okay, I can share this data with whoever I want, right? So that's the real power of it.
Yes. I mean, in our particular case, I mean, we're fully regulated in the same way that banks are. We have client money. We already hold client money. We already do anti-money laundering checks. We do kind of most of the processes that banks do to open an account and close an account and move money. We already do that, and we've already been approved to do that, and we are already regulated to do that. So it's just a matter of kind of continuing to do that, but with more information.
But it's not only us, it's Google, Facebook, Amazon, Apple. I think most people
PayPal.
trust much more these companies than any bank nowadays.
Do you want to quickly, very quickly respond to that, and then we're going to have to wrap it up?
No, for me it's okay.
That's a good answer. Okay, great. Thank you very much. Just like to say thank you very much to the panel, and thanks for listening.
Thank you, Adam.
Thank you.
Thank you.